Silver. You know, for millennia, it's been a symbol of wealth. But today, it's also the silent workhorse at the heart of our high-tech future. So we're going to break down a really modern way to invest in this classic metal, the Bandhan Silver ETF. Okay, let's dive right in and see what makes this thing tick.
So here's what's on the docket. First, we'll look at silver's unique dual identity. Then, we'll dig into why people are so interested in it right now. We'll introduce the ETF as your sort of digital key to silver, check out its performance, and then, and this is crucial, we'll cover the risks. We'll wrap up with all the key facts on the fund itself.
So, to really get a handle on this investment, you first have to understand the metal itself. And believe me, silver wears two very, very different hats.
Now, this is what I find so fascinating. This chart completely breaks the mold for a precious metal. You see, unlike gold, which is mostly for jewelry or sitting in a vault, look at this, almost 60% of all silver demand comes from industry. Think about it, every electric car, every solar panel, pretty much every smartphone has silver in it. This gives it this amazing dual personality. It's a store of value, sure, but it's also a critical and consumed industrial commodity.
And this just shows you how timelessly relevant it is. I mean, for thousands of years, it was money, it was art, then it became essential for something as cool as photography. And today? Well, today, it's just indispensable for the tech that's literally defining our future, from 5G to the entire green energy revolution. Its story is really one of constant reinvention.
So with all that as a background, why is silver grabbing so much attention from investors right now? What exactly is happening in the market?
Well, it pretty much boils down to a classic tug-of-war between supply and demand. And as you can see from this chart, for the last 4 years, demand has been winning, and by a lot. The supply from mining is really struggling to keep up with that soaring industrial and green energy demand. This creates a supply deficit, and that's what some analysts are calling a potential silver squeeze.
Okay, so what does this number mean? This is the gold to silver ratio. Basically, it asks, how many ounces of silver does it take to buy 1 ounce of gold? Right now, that number's over 82, which is way above its long-term average of around 69. Now, for analysts who believe things tend to return to their historical averages, this suggests silver might be pretty undervalued. If that ratio starts to drop back towards its average, it would mean silver would have to outperform gold, maybe significantly.
And here's another classic relationship in the world of commodities. As this chart shows pretty clearly, there's often this inverse correlation between the US dollar and silver. When the dollar gets weaker, it takes more of those weaker dollars to buy an ounce of silver, and that tends to push its price up. It's a huge reason why investors around the world often look to it as a potential hedge against a falling dollar.
Okay, so that's the why behind all the buzz around silver. Now let's switch gears and talk about the how. How can you get exposure to this story without, having to buy actual physical bars of metal?
The modern answer is an ETF, or an exchange-traded fund. The simplest way to think about it is that it's a fund that holds an asset, in this case, actual physical silver, and then units of that fund trade on a stock exchange just like a regular stock. It's really designed to make investing in something like a commodity much, much more accessible.
And this is honestly the best way to think about it. You get that direct exposure to silver's price movements, but you get to skip all the headaches and costs of storage, security, and insurance. It's a digital solution to an age-old investment. Plus, and this is important, here in India, it's treated like a debt fund for tax purposes, which means you can get indexation benefits if you hold it long-term. And that brings us right to the Bandhan Silver ETF. Its objective is crystal clear. It's built to generate returns that correspond to the domestic price of physical silver. That's it. It's a passive vehicle. It's not trying to outsmart the market. It's designed to be the silver market for you.
So we know what it is. We know how it works. But what about the performance? Let's take a look at how silver has acted in the past and what kind of role it might play in a bigger investment portfolio.
Now this is where it gets really interesting, silver's explosive potential. While gold and silver often move together, this data shows that during major rallies, silver has historically delivered way higher returns. That industrial demand we talked about, it adds a layer of volatility that can really amplify gains when the market gets hot. Just for context, the broader silver ETF category has seen returns as high as 160% in a single year during really strong periods.
And this is a fantastic illustration of the diversification benefit. Just look at this 10-year data. A portfolio that's 100% in equities had a volatility of about 16%. But by swapping out 20% for silver, the overall volatility actually went down, and the risk-adjusted returns, which is just a fancy way of saying how much bang you get for your buck risk-wise, they actually went up.
That's the textbook goal of diversification, smoothing out the ride for your portfolio.
Okay, we've talked a lot about the potential upside, but any smart investor knows you have to look at both sides of the coin. Every investment has risks, and it's absolutely essential to understand them. And let's be clear, this fund comes with a very high risk rating.
So that's the critical question, right? What are those trade-offs? What do you really need to be aware of when you're thinking about investing in something that's tied directly to a volatile commodity like silver?
Well, here are the main ones. First, silver moves in long cycles. It can go nowhere or even down for years. Its price is super sensitive to the health of the global economy and any geopolitical drama. We already saw how currency swings can affect it. And all of this leads to high volatility. Prices can swing sharply. And finally, the fund might use derivatives. Now, these are just financial contracts, but they come with their own unique set of complexities and risks that you need to be aware of.
All right, let's wrap this all up by getting down to the brass tacks. Here are the key facts you need to know about the Bandhan Silver ETF itself.
So it's what's called an open-ended scheme, and its benchmark is just the domestic price of physical silver. Now, a key feature for investors is that there is no exit load, which gives you a lot of flexibility. It's also really important to look at the expense ratio, that's the annual fee, which is 0.45%. Since it launched, the fund's delivered a return of about 19.47%, and its recent net asset value, or NAV, was right around 240 rupees.
Ultimately, our goal here was to give you a clear, structured understanding of what this asset is and how this fund works. Because like Benjamin Franklin said, an investment in your own knowledge, well, that always pays the best interest.
So, we've covered silver's two faces, that big supply-demand squeeze, and how an ETF like this offers a modern way to invest. The final question, and it's one only you can answer after your own research, is this. Is this particular silver lining the right fit for your portfolio's future?